Today on Invest Offshore, we examine what happens when Perp DEX technology meets tokenized securities and why ownership, risk, and regulation matter. Welcome to Invest Offshore. I'm Aaron Day. Perpetual decentralized exchanges, or Perp DEXs. I want you to remember, I'm the first person that told you about this. Perp DEXs. They offer long and short exposure through derivative contracts without a conventional expiration date. Tokenized securities are different. They are stocks, bonds, or regulated instruments represented through blockchain tokens or digital ownership records. Put them together though, and we begin to see an always available market where tokenized assets can be transferred, used as collateral, and referenced by programmable derivatives. But a token tracking a stock is not necessarily a share, and a perpetual contract does not mean the trader owns the underlying asset. We will examine what is happening, where the opportunity lies, what can go wrong, and what Invest Offshore believes happens next. By the way, this is educational commentary, not financial, legal, or trading advice. What is happening? Okay, so traditional markets divide trading among exchanges, brokers, custodians, clearinghouses, banks, and transfer agents. It's all paper, baby. The structure works, but it creates limited hours, delayed settlement, and disconnected pools of collateral. Blockchain offers a different architecture. Shared infrastructure where assets, payments, and settlement instructions can be coordinated through programmable networks. Stablecoins and tokenized treasury products have already established a foundation. The next stage could include tokenized equities, bonds, funds, and commodities. Perpetual markets add continuous price exposure. Instead of expiring on a fixed date, perps use funding payments to help keep their prices aligned with the referenced market, whatever what they're pegged on. If tokenized securities provide the assets, the Perp DEXs provide continuous hedging and price discovery. Traditional and digital markets begin to converge. So this is a really cool time right now to be alive. The market is no longer simply tokenizing assets, it is beginning to tokenize the entire trading relationship, because you're going to be able to go long and short on these different assets. So where's the opportunity? It's a four-layered market that we're looking at. The opportunity can be understood through these four layers. First are tokenized assets. That's the stocks, the bonds, treasuries, commodities, and the funds that are represented on-chain. Second is on-chain collateral. We're going to see a lot of this in the future. And that's stable coins or tokenized treasuries that could support a financial position. Third is the Perp DEX. Yeah, there's that word again. It's so funny, but you're going to get to know this and you're going to thank me for this. Perp DEX talk. It provides a continuous long and short price exposure. It's kind of like poly market. It's a betting market in a way, but it's for institutions, and the strongest may use it's for risk management. It's not for speculation. A business holding tokenized commodities might hedge changing prices. A fund holding tokenized bonds could manage currency or interest rate exposure through digital markets. The fourth layer is the verified trader. Now this is what we're interested in right here. Institutional markets will probably combine blockchain efficiency with digital identity. Now that is the meaning of tokenized security trader. So these traders are going to have to be participants who identify both their assets and the collateral, but also who they are through digital infrastructure. So it's not going to be anonymous. There's going to be no big speculation market here. It is going to be super regulated and tight. The opportunity is therefore much larger than 24-hour stock trading. It's way bigger, way bigger. It is a programmable market where eligible assets can be transferred, pledged, and settled more efficiently across borders. Now that's the big key here, is how it affects cross-border. So, know what the token represents. Here's the whole section on the risk and reality check. Investors must distinguish among three arrangements. The first is the recognized ownership. That's where the digital record is connected to the issuer's official record. Second is custodial entitlement, where a third party holds the security and issues a token representing an indirect interest. And third is the synthetic exposure, where a token or derivative follows an asset's price without providing ownership. That's the poly market that I'm talking about. People are going to bet on these things, more or less. These structures are not interchangeable. The synthetic product may offer no voting rights, dividends, or claim against the reference company. A perpetual contract generally provides only price exposure. Perps also involve leverage. Oh boy, do they ever. Funding costs and automatic liquidations. Smart contracts. Yes, that's the whole point of these things. But remember, price oracles and blockchain networks can fail. Liquidity can disappear almost overnight due to market stress. So, regulation at this time remains very decisive though. They've got it really clear. Putting a security on a blockchain does not remove securities law, and derivatives referencing those securities can create additional obligations. Before evaluating any structure, ask, who issued the token? Who owns the underlying asset? What legal right does the holder receive? How is the price determined? What happens if the issuer, custodian, or platform fails? If those answers are unclear, the technology cannot provide the certainty. So, what happens next? Invest Offshore believes the strongest tokenized markets will be hybrid systems. The writing's on the wall. I know this is the way it's going to be. They will use blockchain for transparency and programmability and efficient settlement while retaining verified identity, professional custodian, and legal accountability. So financial institutions will not disappear. Their roles will evolve, and that's what's going to happen. Custodians will verify the asset exists, transfer agents will remain legally recognized owners, and the regulated market operators will provide the surveillance, the pricing, procedures, and the accounting. So, tokenized assets can bring securities and commodities onto programmable networks. On-chain collateral can make capital more mobile. That's what really this is all about. The capital is going to become a lot more mobile. But perpetual markets can add continuous price exposure and management risk. The traders are moving on-chain, there's no doubt about it. But responsible capital will demand verified assets, transparent reserves, qualified custody, and regulatory clarity. So for more analysis on this and tokenization, drop into Invest Offshore. The future of markets may be programmable, but the responsibility to verify is always going to be up to the humans. The opening bell once told the world when trading could begin. On-chain markets are making that moment continuous. This is Aaron Day for Invest Offshore, where global capital finds its path.